We'll start the news with Tether receiving a warning from the Consumer Research reports. And that is because they're saying Tether is shady. Now, I'm still not really too worried about Tether, but Consumers Research issues warning to U.S. governors about alleged risks of Tether. They received a scathing. It's not really a branch of the government, issued a public warning to U.S. governors regarding alleged risks associated with fiat-backed stablecoin issuer Tether. This might actually make certain states move against Tether. I really hope not. A downfall of Tether would be devastating for the crypto industry. Consumers Research is a nonprofit organization that focuses on educating consumers about products, services, and various issues affecting the marketplace. Founded in 1929, it was originally created to provide unbiased, accurate information to help people make informed decisions about products they purchase. So basically, according to their research, Tether operates a stablecoin claimed to be backed one-to-one by the US dollar, but has never really been able to verify or audit this. And they have had audits, but not from the independent auditors that the organization prefers, or like a top 4 auditor. And they're concerned that Tether's alleged ongoing failure to conduct a credible audit could expose consumer to financial risks. And that is a real concern. However, I believe in Tether because people have literally tried to redeem Tether out, and Tether has actually remained strong. However, there is a lack of transparency, and we know that Bitfinex is a little bit shady, and they're the ones that actually back Tether. Furthermore, Consumers Research says Tether has been involved in questionable practices in the past. They point to a 2019 investigation in which New York authorities found that Tether allegedly moved hundreds of millions of dollars to cover up an $850 million shortfall in funds. We actually looked at that when it actually came out, and that did look really suspicious. When you do something like that once, it's hard to get people's trust again. But because Tether is so big and people don't want it to fall, they've basically had no choice but to actually kind of look past that. And of course, the last couple of times they tried to redeem Tether out, Tether survived with flying colors, and that got people's confidence up because when people were questioning them, they actually opened up redemptions. They were able to redeem over $20 million. And the auditors that have actually gone with Tether have said they actually are more than one-to-one backed with cash, or basically cash-like entities. So I'm actually okay with Tether, but they could definitely be more transparent. But this actually could cause some political issues for Tether because they aren't being transparent and they won't agree to an audit with a big 4 auditor, and they've been trying to push it off for a couple of years. So do that as your own risk. I don't think this is any legal liability, but Consumers Research has urged U.S. governors to assess Tether's availability to customers in their states and take steps to protect citizens from potential financial harm. I don't know how many states are actually going to act. Maybe New York and 1 or 2 others. I wouldn't really look too much into this. Obviously, Tether Holdings Limited released an independent auditor's report for the second quarter of 2024, conducted by BDO Italia, an independent third-party accounting firm. According to this report, Tether's assets exceeded its liabilities by $5.33 billion as of June 30th, 2024. The audit covers Tether's consolidated financials and reserves report, confirming that the company's stablecoin USDT is backed by assets such as cash, U.S. Treasury bills, precious metals, Bitcoin, and other investments. I think there's also been some rumors that Tether is one of the biggest holders of U.S. Treasury bills. I don't think that's true. They are a holder of U.S. Treasury bills, but not one of the biggest holders. Like I said, Tether has actually had independent third-party auditors, just not the ones that are preferred. The auditors from BDO Italia performed a series of rigorous checks, including verifying bank statements, reconciling balances to ensure the existence of assets reported by Tether. The audit also involved sampling secured loans to verify that they were adequately collateralized. This independent review process provides assurance that Tether's issued tokens, including USDT, are backed by the corresponding reserves, mitigating some of the concerns surrounding transparency. So I think Tether is generally okay, but not everyone is of the same mindset. But hopefully the governors don't actually take any action against Tether, because that would be very, very bad for our industry. In other news, good thing for Tether, the UK court rules that Tether is property in first English law post-trial crypto ruling. And they called it personal property. I do hope U.S. falls into this. I don't really know if they're going to have to pay property tax for cryptos afterwards, but I think for legal issues, this actually kind of clears it up. The legal status of Tether was preliminary issue in a case brought by fraud victim whose stolen crypto, including Tether, was offloaded through various crypto exchanges. And they said USDT attract property rights under English law. High Court Justice Deputy Judge Richard Farnhill said in September 12th ruling. Now, the ruling didn't really go the way that the guy wanted it to, but the conclusion that Tether was property might actually help its legal status. The victim was basically had his money stolen, and he wanted to show that like his funds were at BitCub and other exchanges, but because the fraudster used mixers, there was no way to prove that his Bitcoin was BitCub's Bitcoin, so he kind of lost the case. But a side effect is that he did actually convince the court that Tether was actually property, so that's pretty interesting. So the other thing is market cuts are coming, and there might be a jumbo cut now. I thought we were settled on 25 basis points, but now it seems like the probability of a 50 basis point cut all of a sudden has jumped to 45%. Now, it's still under the 50%. I think like after there was like an internal leak that actually pointed that they were actually debating and discussing whether it's 25 or 50 basis point cut, and there was real possibility of a 50 basis point cut. Now, I'm a little bit afraid of this because this is getting people's hopes up, and it might actually put us in a lose-lose situation, because if you do a 50-point cut, people might start panicking because they think the economy is going into a recession because you had to do a jumbo cut. But if you don't do a 50-point cut, basically, since the market's kind of expecting one, you didn't cut as much, we might go for a small retrace. Now, I don't think it's going to be a big retrace. I think it's going to be a fairly small retrace, maybe to like 55, maybe to 56 or something from where it is now. I think like we have like one more dip like that before we go up. I don't think there's going to be a massive, massive dip of any sort. But I think Jerome Powell is going to take the more steady path and do the 25 basis point cut. And that will disappoint some people, so the markets may dip, because like with the rising expectation of 50 basis points, if you only do 25, markets will react accordingly. It's not so much like what should be done, but what the markets expect to actually be done. And if you don't like kind of concede to those expectations, the market may drop. I'm not really too worried about Jerome Powell doing the wrong thing. I think he should continue on his path. He's been doing a really, really good job lately with the market, and I don't really see why he would need a jumbo rate cut. And I'm not really sure who provided these Fed meeting leaks, but maybe he wants to get people excited. I think the leaks are actually pretty good, though, and they are earnestly debating 25 or 50, and I think Jerome Powell is going to be on the side of 25. There are, I think, 2 Fed commissioners who might favor 50, but Powell is the main guy. He is the chair, and unless he's, completely overridden by all of them, I think he's going to stick with the 25. But that will bring a lot of volatility next week, and definitely the chance to trade in and out. So watch out for that. Kraken's Lightning Network actually went down for German customers. Now, at first, they thought this was a regulatory issue in Germany. It is not. It is a technical issue. So better than a regulatory issue, because a regulatory issue could last a long time, whereas a technical issue, they can fix within a couple of days. So the Kraken Network feature was suspended for German customers because of technical challenges. Aside from Germany, Kraken is also facing a lawsuit from the US SEC, but that actually had nothing to do with this. So Kraken asked the ability for its customers in Germany to use Lightning Network, citing technical challenges as the reason behind the move. The change was first thought to be because of issues relating to regulation, and luckily they were not, because if they were, this would have been very, very troublesome. That means Germany would have actually taken some action against a crypto exchange, which is definitely not what we want right now. The support agent for the Kraken Lightning Network pointed to regulatory issues as the reason, so it might still be a little bit cloudy, but a spokesperson from Kraken said it was technical issues. The exchange then told the media outlet the reason was technical changes without any explanation, so still a little bit muffled there, and they could just be hiding some regulatory issues, but we'll see. We all know Tether is an off-chain scaling solution for Bitcoin. It's an L2. It employs side channels to perform transactions, enabling users to make smaller payment channels without involving the actual blockchain main network, which eventually settles the transactions in bulk. The features have been most attractive for those users seeking to make small payments with Bitcoin at a much cheaper rate. It can handle around 5,200 Bitcoin and is the key feature that customers were looking for in the need for faster and cheaper transactions. Kraken did emphasize that while they provide state-of-the-art services, sometimes difficult decisions are needed to ensure a reliable and secure platform with clients in Germany. So they're basically shut down for a while for technical reasons and not regulatory reasons. Hopefully, like, they're telling the truth and they're not lying, because if it is regulatory reasons, there is a little reason to be concerned that, like, Germany is acting against crypto assets, and we want to know about that as soon as possible. If it is regulatory reasons, they shouldn't say it's technical reasons, because that would actually be lying to us, the crypto industry, just for their own sake. So hopefully they did not do that, and it is because of technical reasons. So the reason we went up today, the US ETFs did see the largest single day inflow since July. And obviously, with people buying Bitcoin from the inflows, that triggered buys, and we went up. There was some liquidations, but this time it was not BlackRock that actually led the buys. It was actually Fidelity that led the buys with $102 million. Now, $102 million, when you compare it with some of the early days, is really nothing. But I mean, July, August has been pretty crappy, and September so far has been pretty crappy for the Bitcoin ETFs. So it's good to have some inflows. And altogether, they did a late July Altogether today, they did $263 million in a single day, and that coincides with Bitcoin going over $60,000. So inflows into U.S. spot Bitcoin exchange traded funds surged Friday, with a net buying topping $263 million, the largest single day inflow since July 22nd. So it's been almost 2 months, the largest in 2 months. Hopefully that does signal things are turning around, but we obviously can't be completely sure of that. According to data from Farside Investors poured around $102 million into Fidelity's Bitcoin BTC. If you actually look at the chart and data for today, FBTC gained 102.1, BitB, which is gained 41.1. IBIT actually didn't gain anything today. So IBIT's actually been, besides August 26th, it's been largely negative or zero. So like IBIT, which is the BlackRock stuff, is gained $224 million on August 26th, and then lost $13.5 million on the 29th, lost $19.5 million on the 9th, and it's been zero throughout all the other times. So there's been very little action at IBIT. Fidelity BTC has been the most active, but it's been in the loss column for much of early September and late August. Recently, since the 9th, it has actually gone up, so there is a little bit of hope of a resurrection in the market. And of course, today, BitB, ARKB also ARK Bitcoin also got 99 million, and it seems like some of the smaller funds are actually coming up instead of BlackRock, which is perfectly fine. I mean, all the funds are about the same, besides Grayscale, and all the funds have very little fees besides Grayscale, so they're doing pretty well. In terms of GBTC, they are continuing to outflow for the most part. Today they were positive, but only by 6.7. But overall, like, for late August and early September, today is the only day they were positive, and they've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days that were negative from the 26th of August. So you can see that Grayscale is still massively bleeding out, and people are still going from Grayscale to the other funds. Now, the other funds haven't actually gained all that much. Fidelity, I think, is still overall negative, actually, for the last half month or so. BitB is definitely negative for the past half month, and so is ARKB and everyone else. So July and August have actually mainly been outflows for Bitcoin ETFs, and that's really why we're seeing slow trips down, but it actually has turned around since about the 10th of September. There's still some negative outflows from like Grayscale, and stuff, but since like a couple of days ago, we've had like more positive days than negative days. So I think we might have actually hit a bottom in Bitcoin, and there's a lot of demand. Because if you look from the 27th of August all the way down to the 5th of September, it was basically a streak of red. But starting on the 9th of September, there was only 1 day of red and like 1, 2, 3 days of green, or 4 days of green. So overall, pretty good inflows for the last 4 days. Hopefully it actually continues, and we can actually start going up instead of like, continuing waddling in this place. I think there is a lot of demand, but overall the demand has been very, very small in August and early September. And I think as we get to the rate cut, there will actually be more demand. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.